Hello guys, Stock Saturday, recorded again on a Friday just after the markets have closed. Very interesting week we've had. I've made some sales which I will come back to, but yeah, suffice to say gold and silver is doing the portfolio wonders at the moment. We have had some earnings as well, just looking at BlackRock. We've had fourth quarter earnings, sort of them and TSMC are always two of the first to go. I tend to focus on TSMC first since it affects quite a few of my other holdings as well. But yeah, BlackRock's look pretty good. They've sort of had some costs that they're still working through, a little bit like Broadcom. So we're sort of looking at adjusted numbers at the moment, but little summary from Lawrence D. Fink, or Larry as we all call him. Pretty strong. They've had quite a fair bit of inflows, 698 billion of new assets in 2025. So inflow, obviously the existing assets have grown as well, being a strong year. And it's their first. This will be their first full year with the acquisitions that they made, looking to get into private equity and technology and data services, as well as just holding assets. And yeah, some of the numbers are pretty staggering, of course, being the largest asset manager. So from Q4 last year to Q4 this year, they've gone from $11.5 trillion assets under management to just a shade over 14 trillion, which is ridiculous. As they say, total net flows this quarter is 341 billion, 281 last year, so looking pretty good. Revenue strongly up from 5.6 billion to 7 billion, so very, very nice. 23% revenue growth. Operating income and operating margin are both down as a result of some one-off charges, which I'll have a look at. But yeah, everything's sort of quite a bit down. Weighted average shares are up because of the acquisitions. And then adjusted operating income up 22%, almost exactly the same as revenue. So that's good. It all follows through to profit on an adjusted basis at least. And net income 16% up. So obviously there's a little bit of tax and sort of various things that get lost there. EPS sort of is slightly different as well, but yeah, looking pretty good. Net income on a percentage basis on the adjusted number is 31%, so pretty good. I always like to see a lot of these financial stocks above 30%. That's pretty good. Euronext sort of quite similar, and well, CME are sort of close to double that, so we'll see when theirs comes through. Just looking at what flowed in, of course it was a large portion being equity, 126 billion, nearly 84 billion of fixed income. So people still wanting to push bonds, of course. Multi-asset, 37 billion. They do like the sort of diversified funds. Private equity or private markets, 12 billion. Digital assets was quite small in Q4. We've had some selling and some buying, and it sort of netted out to not a lot. Assets under management as of the end of the quarter in digital assets, 78 billion. So it is very, very strong. Sort of nearly half of currency and commodities in total, and they've only been sort of going 2 years, so that's pretty strong. So what are these adjustments? Because it was quite a lot. Adjusted net income is almost double the GAAP net income. So yeah, you've had quite a lot of non-recurring items, amortization and impairment of intangible assets, 200 million. Acquisition-related compensation costs, 231 million. So I guess sort of paying people, extra to join them, paying people off who they don't particularly want. 230 million of that. That is quite a lot, I guess. Acquisition-related transaction costs, 20 million. Small number, but there you go. And change in fair value of contingent consideration. So there seems to be sort of a large figure of things that just get lost, really, relating to amortization and non-cash impairment of intangible assets. Basically incurring in connection with certain acquisitions and other acquisition-related costs, compensation for non-recurring retention-related deferred compensation. So it's pay arguments and issues with people switching company, basically. They say excluding the impact of these expenses as adjusted provides a helpful indication of company's financial performance over time, since they are not recurring. And you've also had a charitable contribution of 80 million. So this doesn't always happen. If you sort of have to monitor whether there's, whether this is sort of regular, and then, to sort of keep saying we'll adjust it out because it's non-recurring when actually, it does sort of come pretty much every year. You have to sort of make the decision whether it should be adjusted out or not. But yeah, it's worth sort of keeping an eye on how often this occurs. And income tax matters. Not quite sure what that is, and there isn't a note about it, but it's only 11 million. So yeah, that's I would say pretty much fair overall set of adjustments. So the sort of $2.1 billion as opposed to 1.1, I would say is fair, and they're just working through this acquisition. It does seem a hell of a lot of costs to be working through for what didn't seem a huge acquisition, but there you go. So we've got some news. As I say, it's all gold and silver at the moment, and sort of driving the portfolio, and it's the talk of the town, with sort of various milestones being hit on prices. And Equinox Gold, they sort of mentioned this before. They were selling their Brazil operations, and this has completed for a total of $1.015 billion. And this was a 900 million immediate cash payment and a production-linked cash payment, depending on how much the mines produce, of up to 115 million. So you basically call it $1 billion. And they've sort of given a bit of an update on balance sheet in advance of the earnings, because obviously this has happened after Q4. But they've said they will use the proceeds, or they have used the proceeds, to repay 500 million term loan, 300 million for the loan from Sprott, and a payment on their revolving credit facility. So it brings debt down to 580 million. They obviously hold some cash as well, cash 430 million, so a net debt of 150 million. I've sort of said that I wasn't happy with this at all, basically, sort of thinking, if we had 250,000 ounces a year with today's gold price, that would have just been generating an enormous amount of cash, and we could have used the cash to pay off that debt rather than sell the whole lot. And they sort of kept saying that they were focused on getting to 1 million ounces a year. Now they're going to be at 750,000, and they're talking about sort of their development pipeline. They could add 450 to 550,000 ounces in the coming years, which will all need expansion, a lot of spending money, and that will then have a dent on net income again. So to get to 1 million, we have to go through all of that again. So I didn't think that was good at all, and hence I've been sort of making some sales of Equinox. So we got Equinox's 2026 guidance, and it's now time for Pan Americans. Not a stock that I mention all that much because I don't have any options on it, so it just kind of sits in my Interactive Brokers ISA. And yeah, they've given the full 2021. Well, yeah, they're saying that they've achieved 2025 production guidance and given 2026 guidance. So they hit 22.8 million ounces of silver and 742,000 ounces of gold, which was sort of revised down from significantly down from the initial sort of estimates that they made when they made the big acquisition of Yamana, I believe's assets. They were talking about 30 million ounces of silver and 1 million ounces of gold. So yeah, we're nowhere near that. They did buy Mag Silver and got part of a Fresnillo mine, really, and that's sort of expected to generate an awful lot of cash, being a low-cost mine going forward. Come down to the table for 2026 guidance, and yeah, similar to Equinox, really. I wasn't all that happy with this. Looking at 25 to 27 million ounces of silver. I thought sort of with the acquisition of Mag, we were going to be at 30. As I say, we should have been at 30 anyway without Mag, and I thought with Mag we would be at 30, but no, it's 26 million ounces on the midpoint, and I was sort of thinking 750 of gold, and they're saying 700 to 750, which is, knowing optimistic guidance, it's not going to be sort of certainly above that, and probably would be sort of towards the mid-range. And all-in sustaining cost for them is just literally all over the place. We've got on the silver side, you've got a Mexico, almost the largest mine at $34.50. That's extremely high. And then the new low-cost one that they've bought, a stake in, at $3.25 all-in sustaining cost. That's sort of down to high grades and some byproducts and things as well. So yeah, that's very, very nice. They have a smaller production, one in Argentina that seems to be doing all of the heavy lifting with a very, very negative all-in sustaining cost, which they put down to short term, it seems like, exceptionally high grades and a lot of byproducts. So yeah, that's bringing things down an awful lot. 28.75 for one in Peru, and $42 for a smaller mine in Bolivia. So overall, 15.75 to 18.25 is pretty good, but it would have been nice to sort of see this, a little bit more even. If the Argentina mine sort of goes wrong, or certainly the Mexico Juanicipio goes wrong, then yeah, this could sort of adjust up drastically. Could be sort of towards the high 20s, with, admittedly silver just touching over $100. That's not a huge hit, but it's nice to sort of see them around 20. I was just looking at Fresnillo to remind myself, and sort of across the board, theirs looks a little bit better. They got one at 22.17. Maybe not absolutely ideal, but then 17, 11, 16.81, all sort of around. Probably gives them a blended average of around 18 to 20. So yeah, that's just a lot calmer all-in sustaining cost rather than this sort of You know, one at $33 and then massively negative, and $42. It's not great for me. Gold sort of in a somewhat similar position. They've got a Chile mine at sort of $400 all-in sustaining cost for gold is exceptionally low, and then you know some very high cost mines, $2,600, 26, 26, 27 is not great at all. That's only a very small mine, but yeah, it's just you know a little bit all over the place. Overall on the gold, it is quite poor. Sort of call that 1775 at the midpoint. I'd sort of prefer to see $1,500 all-in sustaining cost. So yeah, not great, and spending a bit of exploration capex as well. That doesn't look too bad, to be fair. As I say, gold is just absolutely rocketing at the moment. You're looking at sort of 11% up for the month. Gold very rarely sort of moves that much. Wouldn't normally move that much in a year necessarily. Yeah, 79% on the year, almost touching $5,000. You'd sort of think that would be a milestone, and you would sort of get a correction, maybe a load of profit taking. But if silver's anything to go by, we've sort of just watched silver absolutely smash through $100. Sort of got $100 here. On the day, it sort of got close to 98, 99, had a little pullback, and you sort of thought, oh, that's probably it for the day, and then just rocketed all the way through 100 like a hot knife through butter, and sort of settled at 103 for the end of the day. So whether we'll get a big pullback next week, don't know, but seems to be at the moment comfortably sitting above 100, which was rather a surprise. We had copper go up again, sort of that is hovering around $6 with a little bit of resistance. So it has gone above 6 and sort of came back down again. Sort of dollar been weakening the last couple of days and has sort of got back close to it. So looking quite good. Platinum absolutely rocketing, 190% for the year, 7.6% for the week, similar to silver really. Silver 236 for the year, and then of course iron ore is still down, up 4.9% in the last year. That's pretty awful, and down on the month. So I sort of mentioned my dislike for iron ore and wanting to sort of get away from Vales and Rio Tintos and people like that. Price just looks marooned at this sort of just above $100 level, long way back to 2021 highs basically. And we sort of got some news this week of a very, very large mine. Looks to be sort of linked to Rio Tinto. It sort of looks like a joint venture, sort of helped out by the Chinese. I sort of read putting I think it was a railway in to help this, but basically wouldn't have happened otherwise. And an interesting sort of take that this I believe is a fairly high cost mine, and they're sort of almost running it at a loss or sort of running it at cost. But if it lowers the iron ore price, then China sort of get a discount on the vast amount of iron ore that they import. So they're quite happy to do so. But yeah, this is in Guinea, the Simandou mine. So it's made its first shipment to China, and they're saying, obviously, this is just the tip of the iceberg. It's on track to produce 120 million tonnes per year of high-grade ore, equal to the best Brazilian and Australian grades. And at full production, this will be around 7% of all production. So, you've got gigantic mines like this. increasing supply, where I don't think you get this in the copper market. I haven't sort of heard of a mine even in the works, even in exploration, that would be sort of produce or increasing supply by 7%. That's a massive, massive mine and a massive increase to supply. Copper sort of, it does seem like they've found basically all of the good copper, and sort of unless it rockets up to $10 or something, then you might get some old mines that aren't really viable anymore. Maybe at $10 they are viable, so they start getting dug up and the tarpaulin thrown off them. But aside from that, it seems like copper is in much better supply-demand dynamic. So iron ore I continue to stay well away from. Got a bit of a headline as well, sort of January 21st. Russia liquidating 71% of its gold reserves to finance the war effort. It's sort of posted in the Discord, and people sort of thinking, oh, they've seen gold at its record high and decided to sort of take some profit on what they'd been buying, and you actually sort of read into it, and that's not even remotely the case. The volume of gold, according to the Russian Ministry of Finance, so it's the official source, you would say, the volume of gold on their balance sheet dropped by 71%, as they're saying, between May 2022, so 3 months after the war started, and January 2025, so a year ago. 554 metric tons of gold to 160. So they started selling almost 4 years ago and finished selling a year ago. So far from being sort of, this headline sounding as if it's right now or has sort of just happened, this finished a year ago. And obviously gold has been rising in spite of this. I mean, the most of the news, I think, has been sort of implying Russia has been a buyer alongside China and India, but it would seem they had been selling. So they sold 196 tons in 2023 and 171 in 2024. So the majority of this will have been at sort of $2,000 in 2023, sort of $2,500, $2,300 to $2,500 in 2024. So, they're not exactly smart money, selling at that sort of price with, gold now at almost $5,000. But if they had to fund the war, then that's what they had to do. So economic news, there was quite a bit this week. It was a US bank holiday Monday, of course, but we got a little bit of EU inflation data, sort of pretty as expected. 2.3% core CPI, sort of December. So you get preliminary numbers for these earlier on, and it was sort of as expected, basically. UK job numbers looking sort of okay, 5.1%. Unemployment rate isn't particularly good, but 82,000 jobs added in 3 months. This is November, sort of a mix of November and December, so a little bit odd. And then we got CPI data for the UK as well on Wednesday, sort of a bit of a mixed bag. Headline CPI was a bit higher than expected. Core CPI a little bit lower, so whether this was food or energy prices, don't know, but sort of excluding that, things were a little bit better than expected. So yeah, for interest rates, they tend to look at core CPI, so that's probably quite good news. And then yeah, you didn't get a whole lot else until Thursday, when they're sort of still catching up with their backlog. So we sort of got a double core PCE release for October and November, and it was sort of pretty much as expected. Sort of looking at the November year-on-year numbers, 2.8% for core PCE, that's not too bad. And then Friday, we got UK retail sales, quite a bit higher than expected, but you know, this isn't inflation adjusted numbers, so it's basically sort of 3.1% core retail sales. That's about, you know, going up by inflation, so sort of 0% in real terms, and on a headline basis 2.5%. So yeah, not exactly particularly good. And we've got some PMI data. I tend to sort of, from advice from a few different sources, focus on the ISM PMIs a bit more, but sort of got the sort of general PMI numbers, looking at the manufacturing a little bit more than overall, because I'm waiting to, you know, see if the physical economy can get going again, and they were looking up. EU manufacturing 49.4, and UK 51.6, quite a bit higher than expected. Everything was looking good for UK. These are January preliminary numbers, and yeah, EU sort of looking okay on non-manufacturing as well. So that was pretty much it. Oh, I didn't check in on the markets. So yeah, I'm up 2.6% for the week. Pretty happy with that. Going back sort of 5 days, I should really compare from Friday's close at 4 o'clock, because we had the sort of tariff announcements over the weekend and things dropped on Tuesday's open. So from Friday's close, the S&P's down 0.35%, and the Nasdaq did have a little bit of a recovery, so that is actually in the green, 0.3%, funnily enough. But yeah, being up 2.6 on compared to these, very, very happy. And coming to the portfolio, as I say, aside from the gold and silver stocks, pretty much everything is down. So that is what has, you know, given me a strong week. Fresnillo 11%, KGHM 6 is sort of second holding now. Coeur Mining is up 13.4%. I've adjusted the previous week's numbers for where I've made some sales. So did actually sell 500 shares of Coeur Mining, but it is sort of 13.4% up, adjusting for those sold shares where I sort of wasn't before, and it made it look a little bit squiffy, as if it wasn't, you know, wasn't up. Pan American Silver, I was at 943, sold down to 800, but it's 14.6% up on the week. Sort of running some spreadsheets and things. Some of these stocks are getting very, very close to my sort of fair value at sort of, you know, $5,000 gold and $100 silver even. So yeah, it's had to sort of make some sales. I'll probably be continuing to do so. I might sell a little bit of Fresnillo on Monday, see how we get on. Presumably that sort of closed before silver, I think, really strongly broke 100, so expect that'll have a fairly green Monday, and I might take some profit on that. Sort of 477% gain in about a year, I think. So yeah, that's very nice. As I say, some fairly large reds elsewhere. Broadcom down 10%. And some sort of reasonable figures elsewhere. EQT on the natural gas side up 7%. Caterpillar and Prologis both down 6%. And oh yeah, B2 Gold. Not quite sure where that's coming from. That shouldn't be 54%. I did move this just from Trading212 to Interactive Brokers, and yeah, on the options side, so I sold a little bit more Equinox Gold from 315 down to 275, but it's up. It's higher than last week's total, even though I've sold, because it's up 35% on the option side. So that's doing very well. 950% in the green. Very nice. B2 Gold's doing well. Haven't bought or sold any this week. That's sort of a long-term bet. Hive, I have been buying some more. That's down quite heavily this week, but I think everything looks pretty good. You've had sort of dollar coming down and their costs coming down with Bitcoin difficulty. So yeah, I think things still looking good. Nakamoto is just a tiny little holding there as well. And yeah, ETFs sort of unsurprisingly moving a little bit down with the tariffs. Bitcoin and Ethereum sort of moving down as well with turbulence. So yeah, gold and silver sort of saved what could have been a bad week, and I would imagine has been a bit of a rough week for everyone else. So let me know how you guys got on, if you're sort of in the red and deploying some cash, what you're buying, and like and subscribe. See you soon.